Hi, for those of you that don't yet know me, my name is Rob Bezjan. I was a licensed stockbroker for 8 years and have spent far too many hours studying the markets and how they really function and ignoring the hype. I'm a self-proclaimed fraud expert, but I'll let you be the judge. My goal is to make the investing world more transparent and highlight the problems in the market that could lead to you or others being taken advantage of by bad actors. Unlike many talking heads or gurus or investment promoters that are looking to make a quick buck, I'll do my best to speak in plain English, provide a clear thesis, as well as make predictions that can be easily tested. I realize in order to change minds and behavior, my predictions will need to be accurate all or nearly all of the time. This I will live up to. I hope that sounds fair to you. I did a collaboration with Cold Fusion that's worth checking out. The link is in the description. If you appreciate my content, do me a solid and subscribe and share my channel. Please also consider supporting my Patreon. Let's begin. On Friday, ProShares, a company that creates and manages many ETF products, filed an offering document with the SEC to list the first Bitcoin futures ETF under the symbol BITO. This product is set to begin trading tomorrow, October 19th. It's important for investors to know that an ETF that is based on futures contracts is extremely risky and is never an appropriate long-term investment. As future-based ETFs continually roll futures contract, there's an eternal premium that's constantly decaying at the detriment of holders of these products. I'm sure someone in the comments will point out the rare times when futures contracts go in backwardation, but this is the exception and not the norm. In the long run, the future is always more expensive than the present. If this was not the case, intelligent investors would sell now and buy back later at lower prices. Contango is the norm. I want to be clear. I believe that BITO and the leverage and inverse Bitcoin exchange traded products that will soon follow are created to make Wall Street wealthier at your expense. I'm going to provide a narrative based on this assumption. And over time, we will see if my predictions hold water. Sound fair? Good. But before we start, a quick disclaimer. I am no longer a stockbroker, and this video is not investment advice, but merely education. With that said, I'm not wrong, and I think more people should stand up and expose problems in the markets. The pendulum has swung too far in the directions of scams and schemes, and I believe there's a huge opportunity for those that are honest to make a meaningful impact. Let's look at 5 current non-leveraged ETFs that are based on rolling futures contracts just like BITO, and how they compare to the price of the commodity or index they track over the past 5 years. Feel free to go back and use a longer time period. My analysis will always hold true in the long run. Over the past 5 years, all 5 futures-based ETFs drastically underperformed when compared to the underlying commodity or index. VXX lost 96% the past 5 years, USO lost 37%, UNG is down 48%. Wheat and corn ETFs are both within 3% of being flat, but when compared to the roughly 75% gains of the underlying commodities, we see a lot of hype and not a lot of substance for these ETF products. The argument for futures-based ETFs is that the cost of storing commodities is too expensive to be practical, but as you see here, so is purchasing one of these products for the long term. With Bitcoin, unlike other commodities, you can store it with a broker on a UBS stick or pretend it's 1995 and use a 3.1-inch floppy disk. There is no cost to hold an infinite amount of Bitcoin. So why do I consider BITO a scam or scheme? It's simple. If you can hold Bitcoin without a cost and you can mathematically prove that the Bitcoin futures ETF will underperform in the long run, and possibly by a large margin, you can take advantage of the arbitrage between the two by simply purchasing Bitcoin and selling short the ProShares futures ETF. I can guarantee this is what Wall Street trading desks are doing, or they intend to do, and they do this while promoting the BITO ETF to the public. Wall Street doesn't like risk. In their view, this is as close to a risk-free trade as possible, and potentially a very profitable one. Time will tell. So here's a future prediction that everyone will be able to test. Let's pretend we buy $10,000 of Bitcoin and short $10,000 of BITO the day that BITO starts trading, which is tomorrow. We'll use the opening price tomorrow morning on the 19th. Let's check back in 3 months, in 6 months, and in a year and see how these trades turned out. I wonder if any ex-traders would like to take the other side of my prediction and challenge me. My guess is probably not. Why have you never heard of this strategy before? Well, likely it's because those that are making money doing it don't want anyone to know. Simple, right? If everyone does it, the opportunity to make money goes away. So that financial guru you're following that's telling you to get on the BITO ETF, maybe they aren't such a guru after all. Let me be clear. I have no idea where Bitcoin will go, and neither does anyone else. I do know that in the medium and long term, you will be better off buying Bitcoin over BITO or leaving both out of your portfolio. BITO will underperform in the long run, so don't make Wall Street any wealthier by giving them the perfect trade. Please let me know if you like this video and would like me to create more. Please share this video with everyone you know. Support me on Patreon and get recognized in future videos. Cheers.